Joining us now is Howard Roth, a global real estate leader from Ernst & Young, and Philip Blumberg. He is chairman and CEO of Blumberg Capital. Let's start off with you, Philip, since you've just come back from the Middle East, and it's interesting to see the kind of movements that are going on, especially after the Dubai crisis. Okay. Is this a time to be investing in places like the Middle East, or is it still a very risky place?
Well, I think places like Dubai probably have a few years to go before they can wash out enough inventory to make sense from an investment perspective. There are markets in the Middle East which, on a selected smaller investment threshold basis, do make sense. There's certainly opportunity in Saudi Arabia, but it has to open a little bit more and become a little friendlier to outside investors. There's opportunity in Abu Dhabi, which is trying to remake itself. But I'd say in the Middle East, you have generally a situation of a 1 to 2 year time frame where they need, one, to wash out inventory, to find a sense of a robust buying environment, and two, regulatory reforms. Unlike U.S. and Europe, you can build a building without a utility attached, without electricity, and the law is very unclear on who's responsible ultimately for those kinds of services. Laws are also unclear on who's responsible for ultimately repaying a deposit if something weren't built. And those are big issues in Dubai and in some other markets in the Middle East.
You know, Howard, the question then seems to be that a lot of these institutional investors would be very cautious about entering markets like India, where you have issues with regulation, Dubai for an example as well. So what's the biggest challenge right now in the commercial real estate market when it comes to buying?
Well, again, I think you're really looking at, developed versus developing markets. I think, clearly growth is moving from developed to developing countries. And you look at clearly, GDP growth and, demographics and rising populations, and certainly a rising, middle class, which is sort of the key to real estate growth. People need a place to live, work, and play. And I think, obviously when you look at some of the gateway cities in the commercial market in New York, Washington, London, there's quite a bit of transparency. People are comfortable with it, and so even though you might have this macro trend in developing economies, which is one of the things that comes out in our report, it takes institutional investors some time to get used to and get comfortable with the real estate opportunities that are there. And so I think, and that sort of, getting used to the laws, regulations, quite frankly, just, sort of the business customs, in those developing markets. So, again, very good opportunity there. But I think, institutions just sort of take some time and each reach their own comfort level at the appropriate time as to when to invest.
So does this broadly alter the tempo of the sort of pre-crisis mode, where the global REIT as a phenomenon was saying you can move as easily from established markets as from the US, UK, out to Europe and happily be in the Middle East and map and the Far East, and map a global REIT portfolio like you would map a global equity portfolio? Now I'm looking at the returns. It's interesting, the old markets, US and UK, that are leading, and certainly in your report you seem to say a lot of the embedded value of institutions is still there.
I think the Western markets you cite have been called in some markets, in some circles, the best emerging markets in real estate. And I think exactly what you're saying, huge discounts against fundamental economies that will rebound. But we have a $1 billion fund, 30% is allocated to non-U.S. markets, primarily commodities markets, where we think there will be a continued, over an 8-year term, continued appreciation. But from our perspective, I think you're entirely right. The traditional markets that looked overworked, the discounts you're now seeing available, create an emerging opportunity that rivals some of the markets in Asia, which are stronger growth.
Come on, this is rose-tinted spectacles, though, isn't it? Look, the debt overhang in these developed markets is going to continue to suppress prices, isn't it? I mean, we may have had a liquidity rally in REIT prices, but in reality we still haven't unwound the problems that created overvaluation in the commercial sector.
Really, it's a very funny dynamic right now because clearly there's still debt out there that significantly exceeds the value of the collateral. On the other hand, you've got this dynamic of massive amounts of capital, equity capital, both in private equity and in these larger REITs that have recapitalized themselves, that are dying, that are looking for chasing product. And so you have this really unusual supply-demand imbalance. There's huge demand for product, but not enough supply, and you can talk about all the reasons with government policy why that is and why that might be. But what it's really created in a lot of cases, what I tend to call sort of mini bubbles. You have this kind of distressed period. Yet anytime an asset goes on the market, what do you hear? There's 15 to 20 bidders out there, and so you're sort of bidding up prices, even though you're still sort of working through this distressed period.
So the market outlook from here for commercial property investing would be?
I think the thing one has to bear in mind is without bad news, you don't get good deals. So you're absolutely right. We're going to see continued defaults. Those defaults represent the 30% below replacement cost opportunities. I think the cautious, select very well, and back to basics. You've got to know what you're doing in real estate. You don't buy high and hope in 3 months you can sell higher. You have to look at it as a long-term asset, and you got to look at it as well managed, and you've got to buy on a prudent capital structure.
Gentlemen, we've just scratched the surface, but we're going to let you go. But thanks so much for coming in, both of you, and helping us out with the conversation. Philip Blumberg, Chairman and CEO of Blumberg Capital Partners. Howard Roth, Global Real Estate Leader at Ernst & Young. And hopefully we'll catch up with both of them on another day.
Let's have a quick look at what's happening